Hi, I'm Benjamin Day. We're talking about the first quarter 2012 market statistics today. We do a monthly report at Selly Group Real Estate called the Stat Pack. You can check it out at sellygroup.com. One of the important things that we look at the beginning of our Stat Pack is the market barometers. These are the important numbers that we look at in the marketplace. First is that we had 723 single-family sales in the month of March. The average sales price is essentially unchanged from the same time last year. It's been going up slightly for the first 3 months of this year. On each successive month is an average of all the units that have sold. It's at 217,100 right now. This is the number that's the most important number in the marketplace right now, which is the low inventory. And this is affecting things on a number of different fronts. We're at 3,272 listings, which is the lowest number that we've had since the 2002 sales year. We're indicating that the interest rates are at 4% because they've been variable. Today they're at about 3.9%. It's been changing between 3.85 and 4.5% on a volatile basis over the last 30 days. What you need to know as a good number is it's $954 a month for a principal and interest payment on a $200,000 mortgage. It really has never been better than that. This chart shows the relationship between active listings and sold listings. So the blue bars are the sold listings, and the happy green caterpillar, the number of active listings that are on the market. The active listings are on this axis. The sold listings are on this axis. The green listings are triggered to this axis. So if you go back to 2007, you'll see that we had an inventory of almost 7,000 listings during the summer of that year. We are probably not going to see 4,000 listings in the summer of 2012. Right now, as we start April 1st, we were at 3,272 active listings. And the solds, while they're still not as high as they were back in 2007, they're at the same rate as they were in 2008, a little bit better than they were in 2009, not quite as good as 2010, but they've come up and they're kissing the green caterpillar, which shows a level of market balance between the two measurements. When that happens, it affects pricing because supply and demand is moving towards balance. This is a value assigned to that actual supply and demand difference. We're at 4.5 months of inventory right now. That was the average inventory that we had on the market from 2002 to 2006. And it's significantly different than where it's been in the last 5 sales years. At 4.5 months worth of inventory, what we're seeing there is positive pressure moving price forward. 81% of all sales transactions so far this year have been less than $300,000, and less than $300,000 has less than 6 months worth of inventory. So for most participants in the marketplace, either listings or sellers, they're experiencing a marketplace that is now seller controlled. For the pessimists who are thinking that the future values are going to continue to be dropping for the closed transactions, this is the graph where we took apart the data for what's been happening in the real estate pricing spectrum over the last 27 months. And this accounts for the real estate market double dip. You can more readily see the double dip right here. After the first-time buyer tax credit expired in the mid-year 2010, sales values declined significantly. But if you look at where they were compared to January 2010 to now, this data point, they're essentially unchanged. And what we're seeing with that low supply at 4.5 months worth of inventory that's out there is that there's going to be pressure to drive the prices slightly higher. This is the horse that's leading the cart right now when it comes to what's affecting the marketplace the most. And this indicates the properties that are for sale. At this time last year, we had 4,470 listings for sale, and the marketplace peaked out at 4,756. We don't think that we're going to see 4,000 listings on the market this year. At the start of April 1st, we were at 3,272 listings. That was almost the same number of listings that we had on January 1st. For the year, there had been a flat line for the number of listings that had actually come on the marketplace. The difference with year-over-year inventory is a 27% difference. And for the year, we're slightly up, 2 or 3% up in the number of units that are closed. You combine a gain in values that have closed with a 27% drop in inventory, and the market has changed pretty dramatically, again, favoring sellers for the most part. In addition to our friends at Empire Title who've provided us with the horse room and the Sanyo for our screen here, we'd also like to thank the Pikes Peak Association of Realtors. In the last 2 months, they've given us a really helpful measuring stick as to what's going on in the last 15 to 30 days in the marketplace called the pending and under contract comparison. They've not had this data until the February release of data, and we're starting to use this and really seeing exactly what's going on in the marketplace. Last month, 1,722 pending and under contracts, compared to 3,272 active listings. That's a very tight relationship. You go back each successive year, and it's at least 3 times higher in the active field than it was in the under contract field. You go back to 2008, and there were 5 times as many active listings as contracts that were written. And here we're at a factor of something like 1.8 for 2012. This is showing a marketplace that is both experiencing a significant drawdown in inventory and a significant uptick in contract transactions. This is a balloon of closings that's carrying forward into April, into May, into June that is really going to fuel that sustainable recovery. The most pertinent place that you need to look at here for comparison is the first-time buyer tax credit. And there were 150 more pendings and under contracts this year compared to March of 2010. What's very interesting is March of 2010, there was an $8,000 carrot that was being wagged at the buyers at that month saying, come and contract for a house. This is a sustainable recovery. This is consumer-led, where consumers are coming to these decisions not by any stimulus, not by any direction that's being told to them, but by their own free choice. Hey, like charts, like data. We got a lot of these at SellyGroup.com. So if you go to the stat pack, you can look at the specific MLS area or price range. We break this down in $25,000 increments. We do the same thing for townhomes and condos. This is the kind of data that you can find at SellyGroup.com in our stat pack. And this is where we are tracking the majority of the MLS areas where the transactions occur. The really standout data on this are how many areas are in the 3 and 4 month category for months of inventory. What that indicates is if you take all of the listings for sale and you look at the rate of sale for the first quarter of this year, you've got places like Eastern Colorado Springs, think Village 7, around Oro Blanco. There's less than 3 months worth of inventory out there. That means on average that whole MLS area is in appreciation mode. You see that repeated in Old Colorado City, Powers, Southeast Colorado Springs, West. You look at an area like Tri-Lakes at only 7.5 months of inventory, yet the average sales price there is $517,000. Almost all of these numbers we think this year will be less than 6 months of inventory at the peak season of June and July, when the inventory levels are at their peak, but so are the contracts. We keep talking about this appreciating seller's market. We don't want to give you the wrong impression. This doesn't favor everyone. We love to say the phrase real estate isn't fair. What's unique about a piece of real estate is that it's a piece of real estate. There's no quantifiable measuring stick for the dirt your house sits on compared to the dirt across the street. Every piece of dirt is different. It's a real estate fundamental. And right now, 81% of the sales transactions are occurring less than $300,000. So if you look less than $300,000 in many marketplaces, you'll actually see an appreciating seller's market, which means that the sellers that have their houses for sale there are seeing price gains. There's a second quadrant here, which is a neutral seller's market. That means they don't have to drop their price to get buyers. The property values are essentially flat, but as this appreciating seller's market continues up in the price spectrum, they're going to start to benefit from that as well. You also have a buyer's market, which means it's the sellers that are on the market here have too much inventory relative to the supply of buyers that are coming into the market. And they're probably going to have to drop their price to be able to get to contracts. Then you've got the buyer's market in likely decline. The buyer's market that's in likely decline, they probably have to drop their prices just to get showing traffic. So you take some of these MLS areas, let's go right down Northwest. Under 300,000, there's only 3 months worth of inventory. That means in 90 days, every listing is going to be sold in Northwest at the present rate of sale. Some of those homes will sell in 5 days, others will take 120, but it's a measure of the rate of sale. From 3 to 400,000, there are 4.8 months worth of inventory. Pretty soon, this is going to be an appreciating seller's market as well, right in here. A buyer's market exists right above that at 4 to 500,000, where there's 7.9 months worth of inventory. You get over 500,000, there have only been 3 sales for the 31 that are listed in that marketplace. So there's a big change that's happening here. The appreciation that we're seeing, you almost without fail, is at a lower price range. And it is a trickle-up phenomena that's occurring. We expect to see 1 to 3% average price appreciation for the Pikes Peak region this year, and it's going to be a 3 to 5% number for the properties that are less than $300,000, and it's going to be a -3 to -5% number for most of the sellers that are less than $500,000. Thanks again to our friends at Empire Title. This information was extracted from the Pikes Peak Association of Realtors, looking at data from January 1st, 2005 to April 9th, 2012. We thank our partners for putting together this information. If you'd like to receive a full copy of the Stat Pack, email us, call us, or visit sellygroup.com, where you can find the 9-page report for yourself. Thanks.